Today's financial market update, the most important market insights you need to know. Market sentiment is bearish. Market is declining across major indices. Index performance, S&P 500 at 1.32%, Dow Jones at 0.998%, NASDAQ at -1.50%, Russell 2000 at 2.29%. TP experienced a remarkable surge of 84.92%, indicating strong investor confidence in the renewable energy sector's future. The sharp rise in TPET suggests a growing commitment to renewable energy, which may indicate a longer-term shift in investor priorities. Consider increasing exposure to renewable energy stocks like TPET, as they may benefit from sustainability trends and government support initiatives. Crude oil prices have surged past $90 per barrel, raising concerns about sustained inflationary pressures in the economy. The rise in oil prices typically correlates with increased production costs, which can lead to higher prices across various consumer goods and services. Consider diversifying into inflation-protected securities, such as TIPS, to hedge against rising inflation risks in your portfolio. Federal Realty Investment Trust, FRT, reported a funds from operations FFO of $7.22 per share, reflecting a 6.6% year-over-year increase. The strong performance of FRT indicates a healthy real estate market, which can signal positive consumer sentiment and economic stability. Consider investing in Federal Realty Investment Trust, FRT, for exposure to a resilient real estate sector with promising growth indicators. Consumer confidence has declined, with the latest index reading at 94.5, down from 100 earlier this year. The decline in consumer confidence suggests a cautious spending environment, which could slow economic growth and impact corporate earnings. Focus on defensive stocks in consumer staples, as these companies typically perform better in uncertain economic conditions. The effective federal funds rate decreased from 4.33% in mid-2025 to 3.64% in early 2026, indicating a shift in monetary policy. The decrease in the federal funds rate suggests the Fed is adopting a more accommodative stance, aiming to stimulate economic growth amid inflation fears. Consider investing in sectors such as utilities and consumer staples that typically perform well in low-interest environments and can handle inflation pressures. U.S. consumer spending is now segmented into 3 tiers, reflecting significant disparities in financial health and spending power. The 3-tier consumer behavior suggests that while some segments remain resilient, others may struggle, indicating a fragile economic landscape that investors should watch closely. Consider diversifying your portfolio by investing in defensive stocks that typically perform well during economic downturns and inflationary periods. Crude oil prices have surged past $90 per barrel, significantly impacting the energy market and global economies. The increase in oil prices reflects ongoing geopolitical tensions, which can lead to market instability and volatility in related sectors. Consider increasing allocations in energy stocks, particularly major oil companies like ExxonMobil, which are poised to benefit from rising prices. Oil prices have surged by 6% over the past month, creating upward pressure on inflation and currency values. Rising oil prices typically strengthen currencies of oil exporting countries, while increasing costs can weaken consumer sentiment in importing nations. Consider diversifying into energy-related currencies like the Canadian dollar, which may benefit from rising oil prices. Crude oil prices have surged above $90 per barrel due to military actions in the Middle East. The spike in oil prices indicates heightened geopolitical risk, which can lead to increased volatility in energy markets. Consider increasing exposure to energy sector stocks, particularly small-cap companies like Not Offshore Partners and Flex LNG, for potential resilience. Oil prices have surged above $90 per barrel, marking a significant increase from previous months and impacting overall market sentiment. This spike in oil prices indicates increased profitability for major oil producers, suggesting a bullish outlook in the energy sector moving forward. Consider allocating a portion of your portfolio to established oil producers like ExxonMobil and Chevron to capitalize on rising prices. Boeing stock surged 3.7%, following news of a potential 500 jet order from China, signaling strong aviation demand. The potential Boeing order indicates a rebound in China's aviation sector, which could lead to increased production and job creation domestically. Consider investing in Boeing, as demand from China may drive further growth and stock appreciation in the aerospace sector. Oil futures have seen an increase of over 5% this month, impacting overall market stability. Rising oil prices typically lead to higher inflation, causing central banks to consider increasing interest rates, which affects bond yields. Consider diversifying into inflation-protected securities, such as TIPS, to hedge against rising prices driven by oil costs. Federal Realty Investment Trust, FRT, reported a 6.6% increase in funds from operations, FFO, to $7.22 per share for 2025. The increase in FFO for FRT signals robust operational performance, suggesting investor confidence and potential for continued dividend growth in the sector. Consider investing in Federal Realty Investment Trust, FRT, for stable income through dividends, given its strong FFO growth and market position. BlackRock has imposed withdrawal limits on its $26 billion HPS corporate lending fund due to surging redemption requests. The withdrawal restrictions at BlackRock highlight significant liquidity risks in the private credit market, raising alarms for investors about fund stability. Investors should carefully assess the liquidity profiles of private credit funds, considering potential red flags before committing capital. Ford is retrofitting its Kentucky battery plant to produce energy storage solutions, addressing the growing demand from AI data centers. Ford's retooling signals a strategic shift towards energy storage, which is crucial for supporting AI data center operations and infrastructure. Consider investing in companies like Ford that are pivoting towards energy solutions, as they may benefit from the expanding AI market. Bitcoin's price is approaching $70,000, fueled by notable inflows from exchange-traded funds, ETFs, during market volatility. The surge in Bitcoin's price suggests strong bullish sentiment, driven by institutional backing, which could lead to further price increases. Consider allocating a portion of your portfolio to Bitcoin, focusing on entry points around the $65,000 mark to capitalize on potential gains. Ford is transitioning its Kentucky battery plant to focus on energy storage, a response to EV write-downs and market dynamics. Investors should view Ford's pivot as a strategic response to market pressures, indicating a shift in focus towards sustainable energy infrastructure. Consider investing in companies focused on energy storage solutions, as demand is likely to accelerate in response to technological advancements. Thank you for watching FERPA, your financial Sherpa.